This is Ken Lake with MAC with a technical market update for Wednesday, February 8th. The market's up today, 2 in the corn, 16 in the beans, a couple cents in the wheat. And you know, one of the things going on here at this point is that we do have a crop report, which is the monthly supply and demand report tomorrow at noon. Conventional thought right now is that USDA has been pretty aggressive on corn exports, corn domestic use, and at some point we may see that get pared back a little bit, which could increase corn stocks, and therefore we might be a little bit bearish old crop corn values. So it's interesting that we did actually match the old contract high here today at 371, closed at 370 3/4, which is a recent, well actually a recent high close. Stochastic's a little bit overbought, but got some room for upside potential here, and I would think that we might see this thing follow through a little bit if it weren't for the fact that we've got that report for tomorrow. So we do have some anxiety about how USDA will treat us in old crop corn stocks tomorrow. If they don't kill us and we can hold these highs, then we're probably going to set ourselves up for movement into this area, which is another 10 cents or so higher. However, for most customers, we have quite a bit of length in old crop corn. We've recommended that they lighten that up, and we did a lot of that today. So for old crop corn owners, we probably should consider making sales here on these highs with a fear that we could see an adjustment in corn stocks. The December contract, interestingly enough, I know the last time I talked to you about that, pointed out the fact that we've traded significantly over 390 for quite some time. We actually made a recent high today, 397.5 close. Once again, conventional wisdom is that we may see corn acres this spring not decrease as much as what we once thought, which means soybean acres will not go up as much as we once thought either. So, and the reason for that is input costs have dropped, so that Midwest corn farmers returns, corn and soybeans, are pretty darn similar right now. So we know that corn farmers just want to plant corn, and we would think that Iowa, Illinois, Indiana corn farmers with those sort of crop budgets will go ahead and plant that corn, which means corn acres won't see the dramatic drop we had once envisioned. If that's the case, then these hedges in the $3.90 to $4 range will certainly be good numbers for the 2017 crop, and we've recommended that farmers take advantage of that and hedge and sell this $3.90 or better number on some of their 2017 production. Talk just a little bit about March soybeans. We're still about 20 cents or so under the old highs. We have some room for some upside potential here. South Americans are not giving us any help right now, but we're seeing higher markets nevertheless. So it's going to be very important for us to get the numbers out of USDA tomorrow and see where we trade. My thoughts at this point is that even if we do trade lower on a negative corn number from USDA, it'll probably bring the beans down with it, but these lower values have seen buying interest on breaks, and we're still early enough in the seasonal pattern that that's probably the case. So while we have some anxiety, or most of our anxieties over corn, we still may be able to hold these values as we break with some buying interest.